May 6 Monday is the highest crypto and blockchain industry. I'm Zhu. Welcome to the headline sponsored by DeepCoin. Affected by CZ's 4-month sentence on May 1st and the worse than expected U.S. non-farm payrolls data on May 3rd, the average daily trading volume of the Bitcoin spot ETF last week returned to above 2 billion, reaching 2.186 billion. On the last trading day, the Bitcoin spot ETF experienced a net inflow across the board, with even the largest seller at the time, Grayscale's BTC, showing a slight net inflow of funds for the first time. As a result, this also drove Bitcoin's rebound and rally, pushing it back above 60,000 mark. As of noon today, Bitcoin has been hovering around 63,900, but seems to lack the momentum to break through 64,000 US dollar. After non-farm payrolls data came out on May 3rd, which was bullish for the stock market and other financial investment markets, Bitcoin also rose in response. On that day, there was still a net inflow of 2034 Bitcoins into exchanges, but on May 4th, it immediately turned into a net outflow of 4371 Bitcoins, indicating accumulation behavior. This mainly happened because Bitcoin's rebound boosted market sentiment. However, on May 5th, the market cooled down, with only a net outflow of 93 Bitcoins from exchanges, and the net exchange outflows rebalanced. The market's short-term sharp rebound was mainly driven by short-term events and data, with more sentiment-driven gains. The overall trading volume trend remains relatively balanced and sluggish, requiring further tug-of-war. Over the past months, the SOPR spend output profit ratio value for short-term holders with a holding period of 155 days has been fluctuating around 1, indicating that these investors have a relatively high cost basis and are underwater. In the past few days, the SOPR value for short-term holders has dropped to 0.96 when Bitcoin fell below 58,000, indicating that some were selling at a loss, which also reflects the market panic sentiment. The SOPR value for long-term holders with a holding period of more than 155 days has remained above 1, indicating they are taking profits. Especially after Bitcoin fell below 58,000 on May 1st, triggering market panic, the SOPR value for long-term holders started to rise again, showing signs of continued profit-taking at higher levels. Based on the time, the market expects that in May, apart from the potential proof of the ethereum spot ETF as a bullish factor, the market will become increasingly risky in the short term. However, the market remains bullish in the medium to long run, and investors need to reasonably choose investment strategies to assess market investment risks. Since the outbreak of COVID-19, the U.S. economy has faced considerable difficulties, including massive debt, the longest record inversion of U.S. Treasury yields, and the Federal Reserve keeping the federal funds rate at its highest level in 23 years to combat inflation. Coupled with deteriorating commercial real estate loan delinquencies, hundreds of small and regional banks in the U.S. now face existential threats. At the end of April, the Regional Republic First Bank in Pennsylvania was ordered to close and was taken over by the Federal Deposit Insurance Corporation, FDIC, becoming the first U.S. bank failure of 2024. Recently, the U.S. financial world has been hit by an unprecedented storm warning. In the storm, nearly 300 banks are teetering on the brink of collapse, and the culprit behind all this is surprisingly the Federal Reserve's high interest rate policy. The arrival of this financial storm has not only terrified the American people, but also shaken the global financial markets. In this storm, small and regional banks are bearing the brunt.
According to reports, out of the 4,000 financial institutions in the United States, a staggering 282 banks are facing the pressure of collapse. These banks have been severely affected by the impact of the COVID-19 pandemic, and the high interest rate policy maintained by the Federal Reserve has made their survival environment even more adverse. According to estimates by Claros Group, due to the rise in interest rates, the U.S. banking industry is facing unrealized losses of up to $700 billion to $1 trillion. Although these losses have not yet been reflected in financial statements, they have already had a huge impact on the operations of banks.
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
However, in this storm, Federal Reserve Chair Jerome Powell appears relatively calm. Last month, he stated that although the increase in bad commercial real estate loans could cause some banks to fail, the overall situation remains under control. He believes that the troubled banks are more likely to be small and medium-sized banks, while larger banks are relatively safe. However, this under control statement doesn't seem to have reassured the market. On the contrary, it has sparked more concern and panic. After all, in financial markets, once a chain reaction occurs, even small bank failures can trigger systematic risks. So when will the financial storm subside? That may take time to observe, but one thing is certain. This storm has already posed unprecedented challenges and tests for the U.S. banking industry. For those banks teetering on the brink, they must act quickly to address this crisis, or they may collapse completely in this storm. In the ever-changing crypto world, political factors often play an indispensable role. As the U.S. presidential election approaches, former President Trump's potential return to power has sparked a widespread speculation in the crypto community about the stance of the U.S. Securities and Exchange Commission (SEC) on regulation. Many in the crypto world had once hoped that Trump's return would usher in a spring wind of regulation. After all, during his campaign, Trump repeatedly expressed a friendly attitude towards cryptocurrencies, even stating that he would not use regulatory agencies to crack down on the use of cryptocurrencies like Bitcoin. However, recent comments by former SEC official Jennifer Lee have poured cold water on this speculation.
Jennifer Lee, a former official who held a key position in the enforcement division of the U.S. SEC, recently stated frankly in an interview with CNBC that even if Trump were to be reelected as President of the United States, the SEC's regulatory efforts on cryptocurrency would not be relaxed. Regarding the SEC's current regulatory stance on cryptocurrency, Jennifer Lee believes that the SEC's consistency regarding whether specific cryptocurrencies fall within its jurisdiction has improved. However, the question of the SEC's jurisdiction over the cryptocurrency industry and who the primary regulatory authority is, whether it's the CFTC, remains unresolved.
Looking back at Trump's first term, the SEC's regulatory actions in the cryptocurrency space can be described as vigorous. The then chair Jay Clayton explicitly brought some cryptocurrency sales under the SEC regulatory purview and defined the security attributes of initial coin offerings (ICOs). Although Clayton took a relatively accommodating stance towards cryptocurrencies like Bitcoin, the SEC's regulatory efforts in the crypto industry were still not to be underestimated. Coinbase has argued that secondary crypto asset sales do not meet the standards for securities trading and has questioned the relevance of securities regulation. The key point in this case is whether tokens like ethereum and solana are actually securities or not. The SEC's lawsuit against Coinbase has put the judge in a dilemma over the same question of whether the tokens listed on the exchange should be considered securities. The SEC has two similar cases, the first being the SEC's loss against the Ripple, where the judge determined that XRP sales on the secondary market qualify as a token. The second is the SEC's case against Terraform Labs, where the judge ruled that crypto assets like UST, Luna, WLuna, and MIR traded internally as securities. However, this does not involve tokens traded on secondary markets. Therefore, Coinbase's lawsuit with the US SEC will be a pivotal point, and perhaps when Coinbase wins, it will be the time for Ethereum spot ETF to be approved.
Recently, Coinbase and its CEO Brian Armstrong were collectively sued in the Northern California San Francisco District Court. Several plaintiffs from California and Florida claimed that Coinbase's digital asset sales have knowingly violated state securities laws since the company's inception. They pointed out that tokens such as Solana are considered securities, and Coinbase acknowledges in its user agreement that it is a securities broker, thereby making the digital asset securities sold by the exchange considered investment contracts or other securities. They also stated that Coinbase Prime Brokerage Services are a securities broker and the company's business model is illegal.
Yeah, well, there are certainly crypto securities out there. In fact, Coinbase has reviewed, well over 1,000 different assets. 90% of them we've rejected, right? Because we thought some of them could be securities, or we had other concerns about them.
Coinbase has argued that secondary crypto asset sales do not meet the standards for securities trading and has questioned the relevance of securities regulation. The key point in this case is whether tokens like Ethereum and Solana are actually securities or not. The SEC's lawsuit against Coinbase has put the judge in a dilemma over the same question of whether the tokens listed on the exchange should be considered securities. The SEC has two similar cases, the first being the SEC's loss against the Ripple, where the judge determined that XRP sales on the secondary market qualify as a token. The second is the SEC's case against Terraform Labs, where the judge ruled that crypto assets like UST, Luna, WLuna, and MIR traded internally as securities. However, this does not involve tokens traded on secondary markets. Therefore, Coinbase's lawsuit with the US SEC will be a pivotal point, and perhaps when Coinbase wins, it will be the time for Ethereum spot ETF to be approved. Every time the collaboration between Tesla and Musk causes a stir, 2021 was the year when Musk's attitude towards Bitcoin was the most complex and influential. During that year, his words and actions could trigger massive fluctuations in Bitcoin's price. In February 2021, Musk announced that Tesla had purchased $1.5 billion worth of Bitcoin and planned to accept Bitcoin as payment for its cars in the future, causing Bitcoin's price to soar to new highs. However, by May, Musk's attitude had dramatically reversed. 3 years later, according to data released in Tesla's financial report last month, Tesla holds 9,270 Bitcoins, while data recently published by Arkham shows about 1,800 more Bitcoins than before. Has Musk's attitude changed again?
Recently, the Tesla official website added detailed instructions for Dogecoin as a payment method. According to the official website, some Tesla products currently support payment with Dogecoin and are priced in explicit Dogecoin prices. As early as March this year, Musk publicly stated that he would accept Dogecoin to purchase Tesla electric cars. This news not only delighted Dogecoin holders but also shook the cryptocurrency community. What's even more explosive is that some analysts believe Musk may soon restart Bitcoin payments.
And I think there's some value to having a linear increase in the amount of currency that is generated. So, because some amount of the currency, if a currency is too deflationary, or should say, if a currency is expected to increase in value over time, there's reluctance to spend it, because you're like, I'll just hold it and not spend it because its scarcity is increasing with time. So if I spend it now, then I will regret spending it. So I will just,
However, Tesla's dogecoin payment is currently limited to certain merchandise like apparel and toys, not the electric vehicles themselves. This could be Tesla's tentative attempt at accepting cryptocurrency payments, or a cautious observation of market reactions. Nevertheless, based on Tesla's update on using dogecoin payments, the possibility of gradually relaxing cryptocurrency payment restrictions in the future cannot be ignored. Although in 2021, Musk announced the suspension of Bitcoin payments, he did not completely abandon Bitcoin. He previously stated that as long as the proportion of renewable energy used by Bitcoin miners reaches a certain level, Tesla will resume accepting Bitcoin payments. Perhaps today, when we can use Bitcoin to buy a Tesla, is not far off.
Data shows that the total open positions of BTC contracts across the network have surged to $30.47 billion. The total open positions of ETH futures contracts across the network are 3.39 million ETH, equivalent to approximately $10.68 billion. The founder of the Solana ecosystem meme token project Slurf announced on Platform X that SlurfDex is launching soon. According to their video demonstration, this tool may support free trading of Slurf NFTs. Masari recently released the Q1 2024 Filecoin status report. In Q1 2024, nearly 1,900 PIB of data was stored on the Filecoin network through active transactions, representing a 9% increase compared to the previous period. Data indicates that the total value bridge TVB of StarkNet, an Ethereum Layer 2 solution, has surpassed 900,000 ETH, reaching 901,512 ETH. Uniswap announced on Platform X that it has launched the candlestick chart K-line chart feature, allowing users to track real-time price movements of tokens by clicking the Explore tab.
Well, that was the main content of today's show. If you find our channel valuable, please share, follow us, and you can also become a member. Click the top right corner to see our membership benefits. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry. From Monday to Friday, we have news updates, and on Saturday and Sundays, we have in-depth special reports. You can access our Monday to Friday wealth codes and articles by our special authors to help us all get rich slowly. See you tomorrow.